Hey everyone, and welcome back to another episode of Finance and Freedom. My name is Todd, and today we're digging deep into ULTY, what's going on with the price decline, the upcoming 1-for-10 reverse split, what it actually means for you as an investor, and I'll be clearing up some major misconceptions that I'm seeing online, especially around NAV erosion. There's a lot of noise out there right now, so I want to walk through everything step by step so you can make informed decisions, stay calm, and understand the bigger picture. Let's get into it. First things first, this is not NAV erosion. One of the biggest misconceptions floating around right now is this idea that ULTY is experiencing NAV erosion again. And listen, if you've watched my earlier videos, you know NAV erosion can be a real problem with certain YieldMax ETFs. Actually, I think all of them. But that's not what we're seeing right here. A declining share price alone does not mean NAV erosion. Let me repeat that. A falling stock price does not equal NAV erosion. So, what is NAV erosion? NAV erosion is when the ETF's underlying assets are going up, but the ETF's price just keeps on going down regardless. That's a structural issue. That's a breakdown of the fund's ability to track the underlying assets. Now, is that what's happening now? No, not even close. What we're seeing right now is just a good old-fashioned market correction. And honestly, we might be stepping into some early stages of the bear market. ULTY's decline makes sense when you look at the holdings. Let's look at some of ULTY's biggest holdings right now. These have gotten hammered over the last month. Robinhood is down 40%, Palantir is down 25%, Rocket Lab is down 39%, and Coinbase is down 34%. And that's just a sample of their holdings. A lot of their other tech holdings and high growth names are down double digits too. So of course ULTY is falling. It should be falling. It's behaving exactly how it's supposed to behave when the underlying assets fall. This isn't a structural failure. This is the market doing what the market does, especially during the ugly parts of the cycle. Here's the next thing. I like a lot of the companies that ULTY has invested in, and I have a lot of those holdings myself. I have lost a substantial sum in those holdings over the last month, while ULTY has only gone down 21%. Yeah, I know that's still pretty terrible, but it is far from my biggest loser. These underlying assets are still amazing companies, and they're going to recover sometime in the future. The only question is, when? All right, now let's get into the thing that everyone's talking about, the reverse split. ULTY and many of their other ETFs are doing a 1-for-10 reverse split, and it's scheduled to happen this week on November 28th. Here's what that means in simple terms. If you own 100 shares of ULTY, after the split, you'll now own 10 shares, but the price of each share will be multiplied by 10. Your total value does not change at all. You're not being diluted. You're not losing value from the split itself. Nothing is really disappearing or changing. This is just literally just share consolidation. Now, I know reverse splits scare people. It feels like something really bad is happening. So let's talk about why they're doing it. There really are good and bad things about the reverse split. Believe it or not, a reverse split is not always a bad thing. Here's the positive side. It keeps ULTY eligible for retirement accounts and 401ks, IRAs, and other certain custodial accounts that can't hold penny stock level shares. Now, a higher price fixes that. So it also gives ULTY the availability on all major brokers. Some brokers require minimum price rules. So without the reverse split, ULTY risked being restrictions or even removal altogether. Margin users get lower maintenance requirements. This is one of the big ones that I don't think many people talk about. The lower share price equals higher maintenance percentages. I know that a lot of ULTY investors use margin in order to purchase ULTY and then use the weekly dividends to pay off that margin. Well, if the margin maintenance is super high, it makes it so they can't buy nearly as much without having risk of a margin call or other potential issues. A split really works in your favor in this circumstance, and actually all the others before as well. It also prevents penny stock optics. So Let's be honest, people don't like to buy something that looks like it's a 60-cent stock. It just doesn't seem like it has a whole lot of value. Now, a reverse split restores some confidence visually, if not even emotionally. All right, here's the bad news for the reverse split. It does tend to hurt market sentiment. Reverse splits, carry baggage. They just do. They scare off investors because people associate them with, failing companies and bankruptcy, desperation, delisting, a whole myriad of other, bad things. It's not a good look. So even though that's not really what's happening here, the emotional reaction is real. We will likely see a decline in trading volume, some investors jumping ship, reduced AUM, which is assets under management, slower inflows in the short term. It just, psychology matters in a lot of these type of ETFs, and so it could hurt all of those things. So yes, there is a negative impact, but it's hopefully a short-term sentiment problem, not a long-term structural problem. All right, so here's where a lot of investors are kind of getting wrapped around the axle and a little upset. Jay, the CEO of YieldMax, said there would not be another reverse split unless forced to by the threat of extinction. People heard that and assumed, oh, okay, cool. No more reverse splits. We're good to go. And we're not going to have any issues. But that's not exactly what he said. He gave a condition. And guess what? That condition was met. Without this reverse split, ULTY was on a path toward ineligibility for retirement accounts, brokerage restrictions, delisting risk, reduced institutional access. This is the very definition of threat of extinction. So while it feels like he is, just going back on his word, he's actually doing exactly what he said from the beginning. No reverse split unless survival depends on it. And unfortunately, it did. So a lot of people have seen my NAV decline chart that I made and told me that I should redo it. But here's what people don't really understand about the chart. It's based on long-term averages, not short-term movements. From April to October, during that mini bear market, ULTY's NAV didn't decline at all. Then in other periods, it's going to drop faster than the chart predicts. And that's the point. It's meant to show the average behavior of the ETF over the course of years, not predict what it's going to do next week or next month, even next year. The bull markets and bear markets, and the sideways markets even, all of that is baked into the averages. So the chart that I made on my previous video doesn't need to be updated every time the winds change, every time the market does something different. It's doing exactly what it was intended to do and show the averages. So I want to clear something up. You are not losing money from this reverse split. This is something I really want to emphasize because I see so much confusion about it. The reverse split does not cause you to lose money. If you hold 100 shares, it becomes 10 shares. And your 8-cent dividend becomes 80-cent dividends. Everything scales and your total value stays exactly the same. Your total dividends stay the same. Nothing is lost except for the looks of how many shares you have. Nothing is shaved off. Nothing is eaten by fees. It's simply a restructuring of the share count and the share price. All right, so here's my thoughts about the future of ULTY, and here's where I stand. I know Jay and the YieldMax team genuinely tried everything they could to avoid another reverse split. But the market just really hasn't cooperated with that idea. Tech stocks, growth stocks, risk-on assets, they've all been smashed here in the last few weeks and months. It's not something really YieldMax can fix. But here's the upside. Once the markets turn around, and they will eventually, we can easily return to what we saw earlier this year, where there was even a little bit of growth in ULTY. Long periods where NAV doesn't decline and stable premiums and strong total returns, better tracking and smoother performance. ULTY still has a ton of upside potential for long-term holders. I'd like to emphasize this is for long-term holders. Chances are if you bought ULTY sometime recently, you've probably lost a decent amount of money in the short term. The key ingredient here is stay in the long term. You got to get that snowball effect, and if you pull your money out too soon, you're not getting that snowball effect. You're just going to lock in your losses if you decide to sell. So yeah, the reverse split is going to scare some people. We'll probably see assets under management decline, which we've already kind of seen that start to play out. There will likely be some emotional selling. That's just part of the cycle. But the 1-for-10 split gives ULTY enough breathing room that if the market cooperates, we shouldn't need another reverse split for a very long time. And honestly, I think that was the main goal, to give the fund enough runway to survive the downturn and thrive in the next uptrend. All right, so here's some final thoughts to wrap things up. This drop is not NAV erosion. The underlying stocks are tanking, so ULTY is also tanking. The reverse split doesn't hurt your value, and Jay didn't lie. He acted on the threat of extinction. Condition. The long-term potential is still huge, especially once the market recovers. Short-term sentiment is going to be shaky, but that's kind of normal in a bear market. I'm still optimistic about ULTY, especially for long-term investors who understand how these ETFs behave through full market cycles. All right, guys, that's all I've got for today. If this helped clear anything up, make sure you hit that like and subscribe button down below and drop your thoughts in the comments. Are you holding through the reverse split? Are you buying more? Or are you done with ULTY altogether? I'd love to hear what you think. Thanks for watching, and I'll see you in the next one.